Welcome to MarketTamer.com. This video is specifically tailored to one of our members who had a request, but it is being open to everybody because I believe that some of the principles I'll talk about here are especially pertinent to all traders at this time. So what precipitated this video? Well, we received some information. One of our members was experiencing financial challenges, and so one of the aspects of the email just pertained to the difficulty in controlling emotions. Sometimes when a stock, for example, is owned and short call is in place, for example, let's just take this stock. It doesn't really matter what the stock is, but just to outline the principle, we'll have a stock, let's say it's trading at 26.72. We short a call option for 135. And how do we feel when the stock rallies substantially higher? What if it goes above strike 27 up to 28, 29, 30, and so forth? Well, our natural human tendency is to be upset by that. There's an opportunity cost. We would have done better had the stock not rallied all the way up and had we not constrained ourselves in the process by the short call. In fact, what we really need to do is expand our time horizon. If we look in the short term, that's absolutely true. We would have done better in the short term had we not constrained our position with a short call. However, if we look to a longer time period, what we have to ask ourselves is, how would we do if we were continuing to short those options? For example, in this case, the option brings in 135 with the stock at 26.72. That's a return of approximately 5% or so in 13 days. Now, if we were to look over any 30-day period, since the options expire every 30 days or so, we have to ask ourselves, what if we got less than that, even 4%? So I'm trying to be excessively conservative here with this options chain and say, okay, I know we're getting 5% in 13 days, but what if we only got 4% in 30 days, or even 3%? Try and put some conservative figure where you know it's possible to get that in the market, even 2%. Well, if we got 2 or 2.5% or 3% over any 30 days, and we repeated that time after time after time, that's 24% or 36% or 48% every single year. And if we think about it from that perspective, it's much more comforting than looking at the stock rally up in the short term and say, gosh, I didn't take advantage of that 10% move or that 20% move. That's okay. It's okay to miss out on 10 or 15% in the short term if we know that in the long term we'll do substantially better. And we'll do better by continuing the process of shorting options month in, month out, and just lowering cost bases. Ultimately, always trying to lower the cost basis so we reduce our risk in the trade while generating a premium and taking advantage of especially front month premiums, which are pretty attractive time after time. And this is, as we've mentioned in previous videos, the case especially when the market has moved higher and is plateauing or stagnating to a degree, which is to some extent what we're seeing right now. That being the case, what we want to pay attention to also is just sticking very close to the objective facts and staying as far away as we can from our emotions. If you focus on a simple saying that I like to use, which is patience pays, and stay as far away from your natural inclination and emotion to take action, you'll often do much, much better. The bottom line is you can and you will succeed, provided you stick to the rules and control your emotions. If you abandon those rules that have been proven to work, then trading becomes a much, much more challenging game. So in conclusion, remember that saying, patience pays, and feel free to jump into classes and we'll be delighted to help you out.